Today, what I'm going to be talking to you about is how to pay zero income tax. And I know you love this topic because the videos that I've been making that talk about tax deductions have gotten the most views. So in this video, I'm going to give you a step-by-step real-life example of how somebody who's an e-commerce founder making 100K W-2 salary and 200K net profit can get to zero tax in the real world. Okay, so let's start with step one in this process of reducing the e-commerce founder's taxable income to zero. So facts and circumstances are that he has $200,000 in business income after paying himself a $100,000 W-2 salary. If we look at retirement accounts, let's say a solo 401k, for example, that person can take $23,500 and defer that into a solo 401k. So out of the 100K, that reduces their W-2 income to $76,500. And then the business can make a matching contribution up to 25% of the salary of 100K. So they're putting $25,000, and that reduces the business income to $175,000. So now you have $76,500 in W-2 income and $175,000 in business income. All right, next let's look at a HSA contribution by the owner to their HSA. You can contribute a maximum of $85.50 to the HSA. So taking that away from W-2 income, $76,500 was where we're at after the solo 401k contribution. After deducting the $85.50, now you're at $67,950 in wages. Now, since the owner is paying health insurance and they are an S Corp, if I didn't mention, this is going to be an S Corp form of entity, the business will pay for those premiums, but they will include those premiums in box 1 of the W-2. So let's say the annual premiums for a family high deductible plan are $15,000. We had about $67,950 from W-2 income after the other deductions. If we take $15,000 self-employed health deduction, it's included in box 1 as compensation, but then it's reduced on the tax return when you take that self-employed health insurance deduction. Then you're at $52,950 in W-2 wages. Okay, now let's shift gears a little bit back to the business profit. So after we made the 401k, solo 401k matching deduction, net income for the business was $175,000. And let's say the founder has 2 kids and he pays them in 1 year $15,000 each, right? So that's money that's staying in the family and not subject to tax for the children because it's within the standard deduction. So $30,000 for 2 kids. And then let's say they need a vehicle for the business and they decide to get a EV, a Ram ProMaster EV, and they spend $75,000 on that vehicle. That $75,000, because it's a heavy vehicle with a gross vehicle rating over the required amount, the whole amount of that vehicle could be deducted under Section 179 expense. So now you're down to $70,000 in business income. And because you got the EV, you snagged a $7,500 EV credit that will pass through to the owner on their tax return. Okay, so now we're down to $70K in business profits, and let's say the owner decides that they want to invest in new computer equipment and shelving for a warehouse, and that would be all deducted under Section 179. And let's say that's $50K, it brings the taxable business income down to $20,000. Now that $20,000 is going to pass through to the owner on their personal tax return through the K-1. And when it shows up on the personal tax return, they'll be able to claim the qualified business income deduction. So the qualified business income deduction will reduce that net profit by another 20%. So that'll bring it to $18,000 in business income that passes through. And we had, after other adjustments on the W-2 income, $52,950 in W-2 income. So that's $70,950 in total income between W-2 sources and business profits that have shown up on the owner's tax return. So we have $70,950 in total income now on the owner's tax return. And let's say the owner takes the standard deduction. It's becoming less and less common that people itemize deductions as the standardized deduction increases, and it's $30,000 for 2025. So if we take that $30,000 standard deduction away from the income, we have $40,950 in taxable income. The tax on that would be about $4,500. But remember, we've snagged that EV credit of $7,500, right? So that's going to pass through, and that's just going to wipe out the remaining $4,500. So then we're at zero tax. What if we didn't do an EV, right, and didn't have that $7,500? Well, you got your child tax credits too. Let's say this owner had two young teenage kids that still qualified for the child tax credit. That was $2,000 per child, right? So that's $4,000 right there. And maybe they have another child, maybe they have three, right? That could be $6,000 in child tax credits. That can wipe out the remaining tax. So that's how you would get, in a real practical example, from $100K in W-2 income from an S Corp business and $200 profit from the S Corp, and reduce that down to zero tax to the owner. Now, this is just one example, and I wanted to do this video because I always get questions about how to reduce tax, and this kind of shows you like all these available strategies out there, but these don't apply to everyone, right? Because not everybody has kids, for example. The point of this video is not to give you a playbook of exactly what to do, but to understand that there are tax strategies out there that could potentially reduce your income tax to zero, but they often require putting forth cash in some manner that is not available to everyone, or certain situations that everybody doesn't qualify for. In this example, this e-commerce founder was married and they got the standard deduction of $30K. You might not be married. So not everybody is going to be able to take advantage of the same tax strategies. So what's really important is just talking to your CPA and understanding what tax strategies are available. What I do with my clients is I do their tax returns, and then that's usually done, by the deadline towards the beginning of the year, around April and March. And then later in the year, when they've had a better sense of kind of where their business performance is, then I sit down and I analyze their income tax return against over 40 possible strategies that might apply to them. And I then sit down with them and I say, here's strategies that could apply to you. And then I need to know, what kind of cash disposable do you have that you want to apply to these strategies? What is your expected income for the year? And we try to come up with a projection and apply the strategies, and then say, okay, based on those strategies, here's how much tax you're expected to owe, and here's how much you should be making in your estimated payments. So if you enjoyed this video and you found it helpful, please like and subscribe. And if I get a lot more views on a video like this, then I'm going to continue to produce more content that's about reducing income tax, because that seems to be more popular than any of the videos that I'm doing on e-commerce accounting. And if you have any questions, just throw something in the comments. I'd love to hear your feedback. And for those of you out there who are watching this video and you're reviewing all my calculations, hey, I certainly could have made a mistake. This is just a quick back of the napkin thing, and I'm sure you'll correct me in the comments if you find a mistake. Each week I'm going to be producing a new video so that you can see all kinds of tax strategies just like this.